Welcome again to the Rick Helps Real Estate Show. If you're new here, I'd just like to show the data that's going on in the Phoenix real estate market. And I want to speak a little bit about interest rates, but not much. We all know where they're at. They went up. They're sitting here at about, let me pull it up, 7.01, I believe. Oh, 7.12. They're worse than they were yet about an hour ago. So what the heck is going on? Well, there was an article in commentary in the Cromford Market Report that was saying that when you look here at our new listings, that they unexpectedly kind of spiked up, and that seasonally it's kind of bucking the trend. And it's going to be contrary to where I thought it was going to go if this continues, and we'll just have to watch and see. But trend-wise, you know what? It always goes down the closer you get to Thanksgiving and Christmas. Now, we've also been talking about the effect of the election, and after looking at all the numbers and following them pre and post, and the election's over, and now we have room for open house signs on the intersections where we didn't before, I can say that the effect of the election is exactly the same as a normal holiday. Labor Day, 4th of July, Christmas, Thanksgiving. Things just stop, and then goes right back to where it was, and that's what I'm seeing. Even though the Cromford report is showing an increase and an uptick in new listings, when I look at my 7-day moving average, I'm not quite seeing that. I mean, I am seeing that, sitting here today, we're at 21,846. That's considerably higher than last week. But if you look at the new listings that come on here, you can see that we're kind of barely above last year month to date, and this is where we were hanging right there, right? So new listings for the month. So last year we we're at 84,600, today 86,000. So it's not major, about 2,000 more new listings. So why are active listings climbing? Well, because we're just not seeing the sales out there. Now the sales for election week dropped down to 2,200, and I think I actually thought that was going to happen and said that a couple videos back. I always like to point out that there are rare occasions when I'm right. Not bragging, but I got even a blind squirrel finds a nut every once in a while. So we dipped down to 2,200. Now it's coming back as we start to shake off last Tuesday and roll into a new 7-day total. Boink, gonna go back up to 2,400. Problem is, even though new listings are not huge, there's about a 300 to 400 home gap between new listings and the and actually contracts. Now, what we're seeing is, I want to share this chart here because we're seeing that people are putting their homes on the market, and we've got price decreases going on. But is the price decrease an actual fall in the sales prices for houses? And the shorter answer is no. The price increase is a precipitous fall in the seller's expectations. If you look nationally, and I'll point out what I mean here, see up here, this is year over year changes in national home prices. Here's where they went nuts. And so here's the yellow line is Case-Shiller, then you got FHFA, Freddie Mac, and Zillow. Even Zillow's the bottom of the pack, showing us 2.4% up for the year. Well, okay, the problem is people are listing their houses at last year's level, maybe slightly higher. Call it greed, but I like to look at it. I mean, if you had a house, you're going to try and get the most you can out of it. You will. Even if you're looking to buy right now and you say these sellers are greedy, when you buy your house, I guarantee you're not going to mark it down at bargain level prices to sell it. You're going to try and get the most out of it that you can. What's different is a lot of sellers right now simply don't have to sell. They're not upside down on their mortgages. Job losses are not showing up. They're showing up in some segments, but there isn't any despair yet. And when you get despair, that's when you see prices really start to come down. But there's a big equity window that we're working with here in Arizona. People have gained a lot of equity from 2020 to today. Now, if you bought in 2022, no, chances are you probably don't have a lot of equity, especially if you put 5% down. But the advice is you should never buy a home if you turn around and plan on selling it in 2 years or less, because it's just really hard to recoup the cost. Now everything else is going up with housing as well, your insurance, your utilities. So it's been a tough time out there predicting where housing's going to go. It's all over the map. I mean, I don't know. Um, Here's our average days on market. They actually ticked down a little bit from 72 to 71. And I'm looking here, and here's pretty much a little snapshot. It's showing you the supply index is good. Supply is green. It's good. The market index is neutral, going on buyer's market. And the demand index is showing that demand is not good. It's 76.8. 100 is considered balanced. Pretty much falls in line from what we're seeing here on the Zillow market. This is called the Zillow, what the heck they're calling this? The heat index. And they're showing where the buyer's markets are here, where the strong sellers markets are. Rochester, New York. Yeah, now you wait to be a strong seller's market, not when I had to sell and move. So if you come down here and you look at Phoenix, it's saying that it's balanced. That color there, kind of a little bit kind of greenish. In Tucson, is 50.4. We're 53. But you can see here in the yellow, these are considered a seller's market. And the strong seller's market up here and the buyer's market are all down in the southeast, and especially Florida and parts of Texas. In other words, the market is better for you down there. We haven't made that turn yet, but if you look at that chart that I showed you, we're getting close. And we will start seeing more homes being taken off the market now as we get close to the holiday. So let me know in the comments what you think as we get close to the holiday. Are you pulling your home off through Christmas and putting back on in January? Or are you leaving it on? So the argument can be made to leave it on, and the same discussion can be made to take it off, because you don't want to accumulate days on market if you know the market's going to be slow. But the only buyers that are out there looking between the holidays are the serious ones, because they have to move. They probably have a job relocation. They probably want to be here in January, so they're looking to buy. So you might miss out on an opportunity. Plus, if you wait to relist in January, you're not the only one doing it. So you're going to see a lot more new listings show up. So as we continue to watch these numbers, I expect as we come back again and start watching those listings coming down, just because of the holidays, it's going to be a combination of fewer people putting their homes on the market, because I've talked to many potential sellers. Like, I'm going to wait till January. And then you're going to see people pulling it off. So there's a lot of reasons why our listing count will go down and our sales count will go down. But it's the gap between the two that, believe it or not, it's still healthy enough to keep the market afloat. So we'll see what happens. If you have any questions, please shoot me an email at rick@rickhelps.com. Take care.